So I think the way that I think about the 4-year cycle is that, one, until proven otherwise, it's on, number one.
Yeah.
But what I'd say bigger than that is it's not just the Bitcoin 4-year halving cycle. I think Bitcoin is getting wagged by the dog, which is the 4-year global liquidity cycle. So what a lot of people don't realize and think through is that it's global liquidity, meaning the amount of money sloshing around the system that moves asset prices. So when the money supply goes up, asset prices go up. When the money supply goes down, asset prices go down. And that's basically debt. We're in a debt-based monetary system. Money is created through debt issuance. So we look at the amount of money, but we can also look at the amount of available credit, because as there's a lot of credit, then there's more money.
Bitcoin may be on the verge of its most powerful rally yet, not because of its famous halving cycle, but due to a hidden force shaping global markets, the 4-year liquidity cycle. Mark Moss, an entrepreneur, investor, and financial educator, highlights how Bitcoin's current stabilization near $111,000 may be setting the stage for a potential rally toward $200,000. While many focus on Bitcoin's well-known 4-year halving cycle, Moss emphasizes that a much larger force is at play, the global 4-year liquidity cycle. He explains that liquidity, the flow of money and credit through the financial system, is the true driver of asset prices. In a debt-based system where money is created through credit issuance, rising liquidity inflates asset prices, while tightening liquidity suppresses them. According to Moss, the 2008 financial crisis marked a pivotal reset, as interest rates worldwide collapsed to zero, sparking a massive refinancing wave. This synchronized global debt maturities, with nearly 75% concentrated in the 3 to 5 year range, reinforcing a natural 4-year rhythm. Strikingly, this rhythm aligns not only with Bitcoin's halving cycle but also with the US presidential election cycle and broader business cycles. Moss points to global M2 money supply and liquidity indices as key indicators, suggesting the current cycle could peak around Q4 this year. While the halving event reduces new Bitcoin supply and often sparks rallies, Moss warns that liquidity ultimately dictates the magnitude and timing of Bitcoin's moves. This is only the opening chapter of crypto's evolution. The biggest transformations are still to come. Stay tuned, subscribe, and turn on notifications to catch every pivotal move in Bitcoin, Ethereum, and global finance.
So I think the way that I think about the 4-year cycle is that, one, until proven otherwise, it's on, number one.
Yeah.
But what I'd say bigger than that is it's not just the Bitcoin 4-year halving cycle. I think Bitcoin is getting wagged by the dog, which is the 4-year global liquidity cycle. So what a lot of people don't realize and think through is that it's global liquidity, meaning the amount of money sloshing around the system that moves asset prices. So when the money supply goes up, asset prices go up. When the money supply goes down, asset prices go down. And that's basically debt. We're in a debt-based monetary system. Money is created through debt issuance. So we look at the amount of money, but we can also look at the amount of available credit, because as there's a lot of credit, then there's more money. And so what happens is we have all this debt, and this debt is anywhere from months up to like 30 years, like treasuries. So you have all these different durations of debt. And all around the world, you have all types of debt with all types of durations. But if your bank called you up and said, hey, we'll refinance you down to 0.5% of interest, you're going to do that. Yep. And so what happened in 2008, when the great financial crash happened, the global financial crash happened, the entire world brought interest rates down to zero. And when the whole world went to zero, everybody refinanced their debt. Mm-hmm. And you took all this debt with all this different duration that all got synced up in 2008. And today, if you look at the total debt, 75% of it has between a 3 to 5 year duration. So call it 4. Mm-hmm. 75% of the debt. Now that was 2008, which then is 2012 and 2016 and 2020 and 2024, which just so happens to also be the 4-year Bitcoin halving cycle, which also just so happens to be the 4-year presidential election cycle, which just so happens to also be like the 4-year business cycle. And so all of these cycles sort of converge. And so the Bitcoin cycle is there, but I think it's a piece of the global picture of what's going on. So then to answer that question, I would say, well, is the 4-year global macro cycle still in play? And as of right now, it is. Anybody could just go into their trading view and pull up global M2, or you could just Google that and find that. I think the GOATs Well, the GOAT is probably Michael Howell, Capital Wars. He creates a global liquidity scale. My friends over at the Bitcoin Layer, Nick Badia, they have one that's really good. Raoul Paul over at Real Vision has a really good one, if you want to get a little bit more details on that. But I would say we're looking at that. And so let's, if we're thinking about when would this cycle end, if we just look at it from a time duration standpoint, it looks like it should be around Q4 of this year. Mm-hmm. I remember back in 2021, most people, you had Michael Saylor on TV saying that all your models are broken. This time is different. The institutions are buying. And, Bitcoin was in its 60,000 range at the time. And we're like, there's no way this is the top. Like, it's got to be higher this cycle. Yeah. This is not right. Maybe it's not going to peak. It's not going to peak in November like we think it is. But it did. Right on cue. Now, obviously, the cycles and the duration didn't know that Jerome Powell was going to go on the news and announce in November that they were going to start raising rates. But he did. Right on cue, on November, the Fed went on to announce the beginning of the fastest, most aggressive rate hiking cycle we've seen in history, which then, of course, caused Bitcoin to go back down, right? So it was the liquidity cycle that caused the price of Bitcoin to go down, but the peak of the cycle just so happened to coincide with that as well. So the way that I look at this is that we can't predict out if the top will be in 6 months, if it'll be in 12 months, if it gets pushed out to the Pi cycle top being, 2027. Because what those are signposts. Those don't give us the time frame. Here's an example of this.
Bitcoin's ownership shift from retail traders to institutions may be rewriting its famous 4-year cycle. Mark Moss emphasizes that while real estate has long been a reliable wealth-building tool, Bitcoin offers far greater potential for exponential growth. Real estate's appeal lies in its simplicity. Buying, renting, and deducting payments creates a straightforward path to returns. In the U.S., the advantages are amplified by 30-year fixed loans, favorable tax depreciation rules, and the ability to leverage tenants' rent to pay off mortgages. Moss acknowledges these benefits but argues that real estate, despite its stability, cannot rival Bitcoin's revolutionary potential to accelerate wealth creation. Turning to Bitcoin, Moss highlights a significant shift in ownership patterns. Corporate treasuries, public companies, and even governments are now purchasing Bitcoin at rates 10 times higher than the amount produced through mining. This overwhelming demand is being met largely by retail investors selling their holdings. Moss views this as troubling as Bitcoin is migrating from weak retail hands into institutional and sovereign cold storage. Unlike retail traders, corporations such as MicroStrategy, and likely governments, have no intention of selling. This structural transition could fundamentally alter Bitcoin's well-known 4-year halving cycle. In fact, analyses from CryptoQuant and Bitwise executives suggest that the traditional cycle may be losing relevance as institutional adoption reshapes Bitcoin's future trajectory. Let's get back to the interview.
Like that. Yeah. A couple of things I'd say about that, though, real quickly is number one, real estate has been a great way to build wealth for a lot of people.
A lot of people, yeah.
Bitcoin is, real estate is like elementary. Like anybody can get it. It's very simple. It's very easy, right? I buy a house, I rent it out, I deduct the payment. And so it's as far as investing goes, mm-hmm. I'm not trying to figure out NVIDIA's new microchip and how many GPUs will be in demand for the hyperinflation AI boom that it's just like real estate. So it works for some people. Certainly the return on real estate will never beat the return on Bitcoin on a pure standard. But I think Bitcoin, real estate is also misunderstood in a sense where there's a lot of other things that real estate has that Bitcoin doesn't have. So for example, in America, I can get 30-year fixed loans. Cheap money that inflation is going to pay off for me. Yeah. That's pretty good. Number two, especially thanks to Trump's new one big beautiful bill that just got passed, we have this massive depreciation I get from the house so I can write off my income and not pay taxes. That's pretty good. I can have a tenant that makes the payment and pays the house off for me. That's pretty good, right? So there are other advantages. And I think it depends on how much money you have. But as you get more money, as you get more wealth, you have to have different strategies. And I think there's different tools for different pieces. But certainly I would agree with you 100%. Bitcoin is way more exciting, way more revolutionary, and it's going to build wealth way faster. In regards to Bitcoin specifically, we've seen a major makeup shift in the owners of the holders of Bitcoin. And so right now we're seeing like Bitcoin treasury companies, public companies, and even governments are buying 10 times more Bitcoin than is what is being produced through Bitcoin mining. So the demand is way outstripping the supply. Where is this supply coming from? Well, a lot of retail is selling. So it's going from individual retail hands, and it makes me sad. But it's going from weak retail individual hands and going to the corporate, institutional, and sovereign hands. And the thing is, like with Michael Saylor, is he's like, we're never selling. Like, we're just not selling. And a lot of the corporations are doing that, and the sovereigns will do the same. And so I think what's also interesting is seeing that go from retail hands to now institutional cold storage. That could also change that 4-year cycle trajectory as well. But let's just talk specifically sort of what's going on with Strategy and how other people can copy that. So what Strategy has done is they've used a public debt and equity vehicle, the company, MSTR, to acquire Bitcoin. At this point, they've got over 600,000 Bitcoin. But what's the purpose of that? You sort of asked earlier, is it just to acquire Bitcoin? Yes and no. So I would break down these treasury strategy companies into 3 main buckets. So bucket number 1 is, I have a company, we have savings, we have a treasury, and we allocate some to Bitcoin. And I would put Tesla into that bucket. So Tesla has money, Tesla's got billions of dollars of Bitcoin, and it just sits there. So that's layer number 1. Layer number 2 is, I have a business and I have a Bitcoin treasury strategy company. Semler Scientific would be a really good example of that. So Semler Scientific is super committed to their Bitcoin treasury company and trying to leverage the public debt and equity markets to get more Bitcoin, and they have a lot of it. But they're also running a medical business as well. So we have the medical business, and we're leveraging this, and a lot of the new treasury companies, Bitcoin treasury companies that have popped up, maybe like, David Bailey's Nakamoto or Swan's Saquon's, they're looking at being maybe like a conglomerate where they have all these different businesses and they have a Bitcoin treasury strategy company. So that's number 2. And then there's the layer 3, which is what Saylor's doing with Strategy, which is a pure play Bitcoin treasury company. And the difference of that is that, not that we're not going to run any real businesses and we're just going to buy Bitcoin. That's not what it is. What it is that we are building Bitcoin-backed financial.
Bitcoin's path forward appears to be entering a transformative phase, driven not just by its scheduled halvings but by broader macroeconomic forces and a dramatic shift in ownership. As global liquidity cycles influence the flow of capital and institutions, corporations, and even governments accumulate Bitcoin at unprecedented rates, the asset is slowly moving out of speculative retail hands and into long-term cold storage. This tightening supply dynamic, paired with accelerating demand, has the potential to alter the predictable rhythm investors once relied on. Instead of following its famous 4-year cycle, Bitcoin may now be evolving into a true macro asset, an anchor within the global financial system. If Bitcoin's famous 4-year cycle is truly breaking, are we about to witness its biggest rally yet, or the beginning of an entirely new era in global finance? Crypto is rewriting the rules of finance, but only disciplined investors who focus on fundamentals will thrive. Thanks for watching. Don't forget to like, share, and subscribe for more powerful crypto insights.